It is the new year, which means time for new predictions for our market here in Northeast Florida. And more importantly, a little checkup, a little report card for me and where I saw the market based on the numbers last year. Happy New Year. Mike Rolewicz, 904 Home Guide team here with The Real Broker in Jacksonville Beach, Florida. So like we do every January and every month, we're always looking at market stats and where the data is telling us the market is headed. And first off, I'm going to throw a screen print up here of the video we shot last January with a couple predictions, and they were as follows. Number one, I predicted our prices were going to go up 4 to 6%. We fell a little bit short of that, so I'm going to give myself an X. That was not accurate. And we'll explain the reasons why the lid kind of hit our prices this year. Second, I predicted that interest rates would go down slightly over the course of the year, which they did until about September, and they have since reversed course, headed back up closer to 7%, which is about where they started the year. We hit a low of 6.2. So we'll talk about that a little bit. And my last was I expected our inventory to rise slightly here in Northeast Florida. Again, I think I missed there. We had unexpected, really inventory was the story of the year as far as I'm concerned. Inventory kept rising, days on market kept rising for the most part. Couple submarkets where that wasn't the case, but where we do most of ours and where we're going to share a lot of data is Duval and St. Johns County. We put on almost 2,000 additional units of inventory from the start of last year. That impacts everything. That impacts prices, that impacts pricing strategy. So let's take a quick look at what December showed us, and then we'll make some predictions for this year, and hopefully my accuracy will improve a little bit. Starting with our median sales price, as mentioned, we didn't hit that 4 to 6% gain. If we look at January to June, when we peaked at about 417,000 in Duval and St. Johns County versus the 375 where we started the year, about a 6.7% gain. However, we gave some of those gains back during that fall as we talk about seasonality. So for December of 24, our median sales price, Duval and St. Johns County single family homes stood right at 400,000. December of last year, that was 398,095. So just a fractional increase. Again, if we look year to date, January to the end of the year, we're up, about 5%. So we did hit that number, but the data is skewed a little bit. If we look at average price, which we don't look at a lot because there were some really high 8-figure sales along the ocean in Ponte Vedra this year. So year to date, our median price is actually up 4.1 across our whole MLS, average only up 2.5. Median year over year for our whole MLS actually down, right at 0.3%. However, our average, again, that's a lot thanks to those big sales on the ocean, up 8.2%. Predictions for 25 on price, I'm tempering those just because of where interest rates are and the level of inventory we have. Supply is starting to pick up. It's a supply and demand world. I said last year that when interest rates rise, prices don't automatically fall. What happens is transaction counts fall. And we did see that as well. Our transaction counts were down this year quite a bit. December of this year, they picked back up as they oftentimes do. A lot of builders are closing out sales for the year that maybe didn't get booked or put in our MLS until later in the year. I'm going to say 2 to 4%. I'm feeling confident median, at least Duval, St. Johns County. We should still see increases. We're still below our historical averages on inventory. In fact, if we look at December, we're only at 3.6 months of inventory. We're just underneath a balanced market. Again, most of the year it's felt much more like a buyer's market. And when we're representing buyers and we see a home that's been on the market maybe 60 days plus, that seller is going to be lucky to get an offer at 90% of their ask at that point, because the data shows once that listing goes that long, it's going to probably end up 91, 92% of their original ask price. So if they've taken price reductions, that's going to hurt them a little bit more. Interest rates. So there is so much talk of interest rates. There was a strong jobs report last week. That now has everybody thinking that the Fed is now going to soften. They're not going to do as many interest rate cuts this year, maybe only 30 more basis points. A lot of the inflationary concerns that were going down a little bit are now starting to resurface, and we know interest rates and inflation, they go hand in hand. As inflation rises, interest rates rise. So that's going to be a headwind in our market absolutely again this year. As I mentioned at the start of the video, rates are right around 7% right now from that low of 6.2 in September, when we did see some people jump back in the market. We saw more buyers jump back in after the election, the folks that were waiting for that. All that is shaken out, and here we are with a 7% prevailing rate prediction for this year. I think we're going to hover in the mid sixes. I don't see a scenario where 30-year rates without a buy down or without points go down into the fives. However, if they do, expect a frenzy of buyers to enter the market. Lastly, we'll talk about inventory. Right now, our active inventory, again, Duval, St. Johns County, as you'll see on the chart, 5,077 units. That was 3,100 this time last year. So a 63% surge in inventory. Also, if you look seasonally, what happens, if you look at the orange line on this chart, it's a whole lot steeper January until it peaked probably in July, whereas most years, as I mentioned, we're only adding maybe 900 units from the low to the high each year. This year, that number is about 2,500, because some sellers have decided, hey, even though I had a great rate on my home just doesn't fit my needs anymore, or I've got to downsize, or I've got kids going off to college. We've unfortunately helped quite a few folks going through divorces this year. So these life events are adding to our inventory, and the interest rates are capping how many people are ready, willing, and able to buy right now. So to summarize, I'm going to say I'm about 1.5 for 3 on last year's predictions, thanks in large part to interest rates and that unexpected spike in inventory, which kept a lid on transactions and prices. Expecting more of the same this year, unless some huge employers move to the area, unless there's some other big macroeconomic event. I think we'll continue to see manageable, sustainable appreciation on price in our market. Pricing is, I've said it a million times this year to every seller who will listen. Pricing is everything right now. If you want your home to sell, we've got to look at the data, listen to the data, and make yours the most compelling next choice. If you're a buyer in this market, especially before we get into the spring buying season, there are great opportunities. We're going to close 2 this month that we've got buyers walking into $50,000, $60,000, $70,000 of equity based on how we've been able to negotiate, whether that's rate buy downs, whether that's on price. So let's chat. If you're interested in learning more about the market, more about the myriad of charts we've thrown up here today, we'd love to connect with you and hope you have the best 2025.